The FTSE is a pretty unsexy market, right? There's not much going on there.
Listen to this, right? So the LSE had more tech firms on it 30 years ago than it does now, even though the entire global market is driven by tech.
Sorry, that's nuts. That's just going into my brain. There are less tech firms in the FTSE 100 today than there were.
The share price for Amazon, the share price for Tesla, the share price for Facebook, the share price for all of these tech companies is going to absolutely rocket purely because their operational costs for energy are going to basically be cut by 50%.
Hello and welcome to the Market Edge podcast, and it's the last episode of the year. And as 2024 draws to a close, we'll be looking ahead to 2025 and everything that brings to what could be an incredibly volatile year in the markets.
Yeah, I mean, this year's already been an absolutely mental year for markets and the global economy. But I think 2025, is going to really be much of the same. Trump's becoming president, and there's a load of different changes that will be going on.
Today, we're a little bit different. We're going to be looking at 3 key stocks that we believe in 2025 are going to be mammoth trades.
Now, do us a favor. If you like what we're talking about, drop us a follow, a subscribe, and also make sure that you like and comment on this video.
We'll start off with the meme of the week. Now, we tend to have a bit of a theme running with these memes, meme of the week, and This is not against anybody out there, right? But we do, and remember, we are traders as well, and we've done all of these things, but we seem to quite take the mickey out of everybody in these memes of the week and, these stupid decisions that everybody makes when it comes to trading. So let me just describe this for those listening. It's a picture, or it's a cartoon of someone looking in the mirror and pointing at themselves aggressively and saying, it says at the top, it's not the bull market, you really are a genius. Now, Of course, this goes into the fact that every trader out there thinks they're an incredible genius when they make money. And it's not the fact, and we've said this quite a lot in terms of trading strategies, it's not just the fact that everything's in a bull market and everything's going up, so just buy things because they're going up. And we've said about these trading strategies before, like 52-week highs and things like that. It tends to be, things are going up, they tend to keep going up. If they've been going up for long enough, that tends to be the way they tend to move.
Yeah, I think there's 2 ways to look at this, and I think retail traders should spend their time looking at extracting something called beta rather than looking for alpha.
Yeah.
Because if you're looking for alpha, what you're going to need in this day and age is you're going to need a team of quants. You're going to need the most expensive infrastructure that has ever existed, like Citadel, like a lot of the hedge funds, for example. You're going to need, the best talent in the world, but also what you're going to need is a desire to be short the market, because that actually tends to be where alpha comes from these days. Now, what we can do as retail and professional traders and investors is we can look at beta and managing our risk according to the extent to which beta actually moves. And beta is basically, how much an asset might outperform a benchmark or outperform the market. So if we're focusing on looking at these real momentum trades rather than anything that is really specific with trying to find an edge. The edge can actually just be in extracting beta, by the way. But if we're not looking at anything too complex, then I would rather spend my time doing that than trying to formulate a strategy and absolutely decimating my brain cells with all of this requirement to know, oh God, this bit of data is now out of line. I don't have the money or capacity to be able to do that.
Yeah. No, exactly that. Plus, going back to a little bit on the psychology of that meme, it's okay to think you're a genius. I think retail traders give ourselves a bit of a hard time, to be fair. I think we're all there trying to. It's hard, right, to make money. A lot of time, it's hard. It's not an easy thing to do. There's no get rich quick schemes in trading. So if you do well and if you make some money, I think you're a genius, I think. Why not?
Yeah.
I think a lot of time people tend to give themselves a hard time. You do well. One key thing someone used to tell me about trading back when I first started in this was, especially when you're trading small, not everyone's trading massive size, right? But one of the most important things about trading is that if you got it right, take some of that out take some profit and go and buy something with it. Go and do something with it. You know, back then it was like, to go and buy a new suit or go and buy a nice shirt or, you know, buy a pair of trainers or whatever it is. When you trade in, take that, you've done well, take some money and go and buy something, get something, reward yourself with what you've done, right? Because, you know,
it's quite
easy to lose.
It's quite interesting because there's something common that happens in the crypto sphere, which is round tripping. Because effectively, because you're swapping tokens all the time, it feels like it's not real money.
Yeah.
And so what happens is that people end up making loads of money, if you like, but it's in a token. And so what they do is they've made all of this money, which is in a token, but then the value of that token might go down.
Yeah,
so they've got
so
no
you
more
close
money.
your trade, and then the
so
token value
so
goes down.
it's not actual currency until you've, you know, basically moved it onto an exchange and put it into your bank account.
Yeah.
So it's quite an interesting concept that tends to happen in crypto quite a lot, where people just can't bank because they're stuck in an ecosystem.
And it's important to do, right? Because this is the whole reason you're doing it.
It's to make money. Yeah.
Tweet of the week kind of runs into that as well, and it's again market sentiment by year. This runs through the years. 2017, I'm a genius. 2018, I'm an idiot. 2019, I'm a genius. 2020, I'm an idiot. No way, I'm a genius.
Yeah.
It runs through. Actually, 2021, I'm a golden god. You know, 2020 and 2021 were the times where everybody was a genius. It was COVID times, right? Trading. But I mean, shows you the same thing. Just this psychology of trading, right? The up and down nature of what happens every year. And it's not, you know, comes back to that point. If you're doing well, take something out.
But the interesting thing here is if you look at the price of the S&P 500 in 2017, and now you look at the price of it now, surely you can just say, if you just didn't do anything, that you're just a genius.
Yeah. Buy it, leave it.
Because it's designed to go up.
Yeah.
It's a market cap weighted index.
Yeah.
Which also has, which means that the worst performer is replaced by the next best performer.
Yeah, so we'll always fundamentally go.
It will effectively
if there's something bringing it down too much, they'll take that out and put something stronger in it.
Literally, as long as US growth continues, the S&P 500 will always go up. Yeah. And you've got bigger fish to fry if the US growth is collapsing than the S&P 500 not going up. You've got far worse things to worry about. Yeah. Which makes it a very obvious trade and investment. And I'm not going to specify exactly what to do, but smart people can probably, you know, deduce what to do from that.
Yeah, absolutely. Okay, so let's look at last week and what we had last week. 2 trades that we had in for. Now, last time we recorded was Thanksgiving, wasn't it? So we were talking around the Thanksgiving trades, what was happening there. One of them was Costco. Now, Costco has taken a bit of a beating over that time period. Yeah. Not much, though. You know, to be fair, it's tipped off. But this is another one of those stocks, right?
It's effectively flat. And if you look at
exactly.
You know, certain measures of how you might want to exit a market, what are those moving averages there? The 50 hour and 100. If you've got certain momentum measures and you see that the momentum's died, very simple rules could be that you exit. So based off of something like that, where we entered Thanksgiving, which was the 26th of November, was it?
Yeah, so actually from the 26th of November, it's had... I mean, this is clear what's happened here. You can see on the chart, and for those who don't have this chart, we can explain this a little bit. From pretty much the 25th of November, this is ramped higher. It's then dropped off, come back up for a double top, and then fallen back off.
Yeah. So, you know, it's fine. It's Costco. It's one of the biggest companies in the US, in the world. You know, it depends on what time frame you're looking at. I don't really like to call trades over, you know, a couple of weeks because it's not how I do things.
Yeah.
So, you know, the momentum was with it at the time. The momentum's been sucked out just because of the FOMC meeting. Yeah. That's literally all it is.
Exactly.
So, I consider it a winner.
Yeah.
In my eyes, over the time period that we were looking at.
And plus, that was another 52-week high flying for ages. Yeah. Slight drop off. Buying opportunities, right? So the next one was the FTSE. Now, there was this interesting point that we said last time, wasn't there, about this trade, this Thanksgiving trade on the FTSE 100. You know, very little correlation between the two, but there was this trade.
Yeah, and you can't see it from this chart. But
no, this is a longer term chart. We'll come back to that in a second.
If you take a look at the period over Thanksgiving, if you were to have bought it on the open of Thanksgiving when the UK market was open, which I think was the Thursday this year. I'm pretty sure it was the Thursday. And then you closed it on the Tuesday, you'd have made 0.5%.
Yeah.
So not bad for a weekend trade. And that tends to happen about 70% of the time. So it's a good edge. You know, you're not going to make a ton out of it unless you throw a ton of size behind it. But,
no.
you know.
But this covers off, and it comes back to, we're kind of recapping the 2024 year, looking ahead to 2025. Now, we've already mentioned the S&P, the Dow's hit record highs this year, FTSE 100 hit record highs this year. Now, it was back in the summer, end of May, June, and it was just above 8,400, was it? Don't know the exact number, but just above 8,400. Obviously, it fell off from those highs, but it's kind of just sideways since then, and it's just playing around in those sorts of areas. But I think the fundamental thing here, the FTSE's not really a very sexy index, is it? Nobody likes it really. It's got very little tech in it, and if oil has a bad year, the FTSE tends to have a bad year.
Well, it's getting worse as well, because today Rio Tinto wants to go and list on the ASX.
Yeah.
Now, Rio Tinto is the 11th largest firm in the FTSE.
Yeah.
And we have zero, and I mean zero, firms that are at all exciting.
Yeah.
Apart from one, which we'll talk about later on in this, that really wants to enter the index.
Yeah.
The UK is in a real sorry state.
Yeah, yeah.
And I kind of get a little bit annoyed. There's a couple of guys on LinkedIn who are about, they're all about pushing tech firms to list on the FTSE. And I look at them and I'm like, why are you hired?
Yeah.
Because that's just not happening.
Yeah. Why would a massive tech firm, not even a massive tech firm, a tech firm that's got, a great bit of technology, I mean, it's just we had the most backwards country you'd ever listed.
We had more tech firms on the FTSE 30 years ago than we do now.
I mean, that's mind-boggling.
The issue with the UK is purely...
Sorry, that's nuts. That's just going into my brain. There are less tech firms in the FTSE 100 today than there were...
I think on the LSE completely, not even just the FTSE.
I mean, wow.
Sorry,
I interrupt you there with my
there's
exasperation.
fewer listed tech firms now than there were 30 years ago on the LSE, when tech is literally what powers
everything.
But it's what powers most stock markets these days.
Yeah.
It's insane, but it's a purely UK symptom. The country is decimated.
Yeah.
Culturally and also economically.
Yeah.
We are a health service with a country attached. And all of these other issues that we see are because of that.
So if we then talk about 2025 in terms of the UK and the UK markets, now the FTSE 100, from an index perspective, how correlated is a FTSE 100 to, say, an S&P or a Dow Jones? Because, there's no tech firms in it, right, in the FTSE 100, but how much of that symptom of, the NASDAQ, the S&P and the Dow are going up, so global stock markets are just going to follow?
Well, the interesting thing about the FTSE is that 75 to 80% of the revenues of those companies are actually conducted in USD.
Yeah.
So it's the same with the DAX in Germany.
Yeah.
The DAX is going up because US firms and US, consumers are buying the goods from Germany. Now, the UK market is very much dominated by miners, miners, oil firms, and that kind of thing, which is correlated to the US market, but it's like they're kind of supplying, if you like, the base resources to the US market.
Yeah.
And so you're not seeing that innovation that is anyone's getting excited about. You're seeing the UK or the LSE as an outpost for the US.
Yeah.
And all of those revenues are diverted elsewhere. None of them, whereas the US markets, the listed companies there are being consumed the most by US consumers.
And with Donald Trump coming in as presidency, that's only going to increase.
Exactly.
Let's look at the three biggest stocks into 2025. So we've got these stock picks, right? So stock picks, 3 stocks, I mean, we haven't gone out of, the realms of mainstream here, but there's key reasons why some of these stocks are here. And we're going to start with a US institution, which is Walmart. The chart here shows going back to 2018, the share price there. I mean, huge stock moves. But where's Walmart and what we're looking at here? One of the key points here is how they're diversifying the business, right?
Yeah, there's definitely a case of that. I think, if you're looking slightly defensively, especially because Trump's coming in, the market might think, oh, what's going to change? Markets don't like uncertainty. I think Walmart's a strong pick purely because it is something that will be a staple no matter what. Everyone's still going to go to Walmart, whether times are good, whether times are bad.
Yeah.
They cater to, everybody.
Yeah.
And, it's
like a physical Amazon.
It is a physical Amazon, but also it's just like it's got that legacy behind them, and the stock price reflects it.
Yeah.
But the key thing that I've noticed recently is they've moved into the mortgage and financial services business.
Yeah.
And just recently they've partnered, and this isn't in the financial services business, but they've partnered with a food delivery firm in China. Mm-hmm. Now, from my wild view, that provides the market with a potential reason to say, okay, Walmart might end up moving financial services, some of their financial services arm into China, which would make sense because I think the CCP wants to take a lot of the mortgage leverage away from the domestic Chinese market. They wouldn't mind foreign firms now coming and taking that risk on because the property market there is completely battered.
Yeah.
It's a very outside view, but I see it from a risk to reward perspective that if that were to happen, Walmart's value would probably increase by 25 to 30% straight away.
Now, we've also seen in the UK, this has happened for a long time, hasn't it? Supermarkets getting into the financial services world, Sainsbury's, Tesco, credit cards and things like that. Mm-hmm. Where does a Walmart in the US or Tesco, Sainsbury's in the UK, where does that sit in that financial services tier now? Because you've had your big banks, you've had your retailers getting into financial services, but now you've got these challenger banks in the middle. Does that not take away a lot of the appetite for the likes of Walmart and other Sainsbury's or whatever to get into financial services?
Well, if you think about it, you're doing your weekly shop, or maybe I go to Tesco's, Waitrose pretty much almost every day, to be fair, because we don't really do a weekly shop anymore.
No,
it's strange. I don't know whether that concept is very alien these days, but I just
no one's got any time anymore. I just go and buy something to eat there.
Well, exactly, yeah. And I think I was speaking with a guy who runs a massive marketing agency, global marketing agency, just a couple of weeks ago, and he was saying that a move now is with shop fronts no longer to be catering to actually selling things there. What it is a almost like a media brand, which would then go and sell financial services and sell everything else. Because what that shop is it's a place where the tribe, if you like, is captured. Yeah. And so that's what I see with Walmart. I see Walmart being a place where people go for their weekly shop, but then also, oh, you want to speak to a financial advisor, do you? Oh, here you go. Yeah. You want to speak to your mortgage advisor? Here you go.
Yeah, you have to run a gauntlet as you walk out the shop of someone selling you a mobile phone, someone selling you a mortgage, someone selling you a loan, someone car, whatever.
But the margin on that is insane because Walmart, I think, could effectively borrow at 0%, even if rates are at 4.5%.
And as is the financial power of the companies like this, is they can do it for literally nothing.
Exactly. So their margins are massive, while still retaining that client who's going to go and spend money with them anyway. So it's even different to a bank because they're monetizing on, people buying food, buying their groceries, buying, loads of stuff. You get a fridge at Walmart if you want to, but then also going and taking out a mortgage.
Yeah.
And so they're basically hedging their risk.
Yeah.
So it's a strong idea, and that's why, if they were to do that in China, boom.
Next one is our favorite topic of conversation on this podcast, actually, is a Tesla Elon Musk trade sitting in there. The fact that Elon Musk is in the position that he's in with the new administration coming in means that the Elon Musk trade is a big one for 2025, especially, and we've mentioned this on this podcast before, especially in the first 6 months, because, and you've stated this, there is that fear, two massive personalities fall out pretty quickly.
Yeah.
But for the first 6 months at least, that's the trade. You know, is this why we've got Tesla here?
I think there's a respect from Trump about having, you know, one of the richest men in the world on his team.
Yeah.
The biggest car company in the world. A man who's sending rockets into space, sending satellites into space, putting chips into people's brains. You can tell the market loves.
Yeah, of course. Yeah, I mean,
can
the
tell by the
market
price.
loves it. We've said it before. The Model S or T, whatever one, was the biggest selling car in the world.
And I think, you know, there's a phrase that I like, I really, really quite like, and it will be obvious in hindsight.
Yeah.
Because whenever I kind of doubt or have a doubt like that, that kind of thesis there, I think, will it be obvious in hindsight? Like looking back, if I can imagine a chart from now to a year or two's time, I think to myself, how obvious will it be that I should have bought here?
Yeah, yeah. It's like the whole buy the S&P stock.
There you go.
Okay, last one is Rolls Royce. Rolls Royce and Tesla, very different. Where's Rolls Royce going in this situation? Obviously, Rolls Royce isn't cars. This is what we want to point out. This is not cars.
Yeah.
Who's the Rolls Royce brand owned by now? Jaguar?
BMW.
BMW?
Yeah.
Yeah. Anyway, Rolls Royce is engines and aviation.
Yeah, but also nuclear energy.
Yeah.
So they partnered with Cavendish, who runs a lot of the operations for nuclear power plants. But the big thing and why the Rolls-Royce price has increased so much in recent years is because of SMRs, small modular reactors. Now, small modular reactors in more recent months have been investigated by the likes of Facebook, Amazon, Tesla to be able to power all of their factories. Because what they are is basically a nuclear reactor that can be created in about a year, 18 months. And it's not the same size as, say, you know, Sizewell C or Hinkley Point.
Yeah.
They're much smaller to be able to power towns or data centers, which is the biggest thing.
That's the key one.
Because what this tech will be able to do is it will be able to massively increase the margins of these data centers, which, if you think about that concept, means the share price for Amazon, the share price for Tesla, the share price for Facebook, you know, the share price for all of these tech companies is going to absolutely rocket purely because it means that their operational costs for energy are going to basically be cut by 50%.
So, I mean, look, we've got huge movements there in all of these stocks. You know, three key ones which are gonna drive us drive 2025. You know, and that interesting one with Rolls Royce is the fact that, you know, we were talking about UK companies. Rolls Royce, UK company, FTSE 100 listed, right?
But this is the risk: is that, okay, do they become so successful that they want the liquidity that then means that they go to the US?
Yeah, delist out the
why
UK.
would they stay on the LSE?
Yeah. So that's it from the Market Edge podcast for today and for 2024. Thank you so much for listening over the course of this year. Have a happy Christmas. Don't forget to like and subscribe, and we will see you in 2025.